Good afternoon and welcome to the end of week market review for August 16th, 2013. You're going to see that we're dealing with a little bit of a new market condition this week. We'll definitely get a chance to take a look at that as we go through our agenda. Basically, we're going to start things off by taking a look at the market news, just trying to get an idea of what's been going on a global scale and how it's been affecting the US markets. While we're doing that, we're going to be looking at economic reports. These reports are going to help us identify what the major catalysts were that affected the US markets from an economic standpoint. After we've done that, we're going to go ahead and do some technical analysis. We'll be looking at both the S&P 500 and the Toronto Stock Exchange. While we're doing this, we'll be looking at daily charts and weekly charts. So while looking at the weekly charts, we're going to be looking both short-term and long-term. Finally, we'll wrap things up by taking a look at the volatility indicator, just trying to get an idea of how much volatility is in the current marketplace and what we can expect with it where it is. So as we mentioned earlier, we can see that the markets have definitely taken a hit. This has been obvious as we've been looking at the end of day market reviews throughout the week. You're going to notice that right now the Dow Jones is down 2.23% from last week's close. Now the S&P 500 is down 2.10% from last week. So definitely some falls and declines there on the markets. Moving into some of the commodities, we can see that oil is up 3.31%. This puts it to $107.95 per barrel. We've got silver up a whopping 13.12%. This puts it to $23.20 per ounce. Definitely the largest of all of the commodities. Now we've got gold up 6.45%. This puts it to $1,368 per ounce. And finally, we're looking at the US Canadian pair. You can see that it is up 0.44% from last week. This puts it to 1.0338 pips. While looking at the economic reports, the one thing that we really want to focus in on is the jobless claims. We can see that we ended up with 320,000 filings versus the 340,000 that they were expecting. Because we didn't have as many jobless claims, we ended up seeing a little bit of a help from that. Unfortunately, though, it wasn't enough to stop the markets from their declines. So with that said, we're now looking at the S&P 500 on the daily chart. You're going to see that this week we've broken down below some key support levels. We broke down below the 22 EMA and the 50 EMA. While going through this, we also end up seeing the MACD drop down into bearish territory. So we are declining bearish, and with the black line down below the blue line. Looking at the S&P 500 on the weekly chart, you're going to see that we've definitely had some declines. We're on our second week of declines from reaching some cycle highs 3 weeks ago, but we're definitely not at a point where we need to say the markets are in a turmoil or in bad shape. Right now, we can expect that it might drop down to the 26 EMA, where it will end up finding support and working itself back up again. Obviously, we don't know whether or not that's going to happen, though, so we need to make sure that we're trading with some caution until then. Just to add a little bit of light to where things are, you're going to see that the S&P 500 is definitely at all-time highs, even though we've had the couple of weeks of declines. What's more important to note, though, is that we've had pretty much nothing but good, strong, steady gains for the last several years. So we really need to look at this and realize that, you know what, we might be having a short-term pullback. This pullback might last a couple of days, it might last a couple of weeks. But when you look at the big scheme of things, we're still definitely on track for further gains. So jumping over now to the Toronto Stock Exchange, you're going to see that we ended up bouncing down off of some support at the 200 EMA, and we've now worked ourselves up and breaking into new highs. Now we did end up with a pullback on the day, putting us below the previous cycle high, but we are looking at some pretty good conditions considering. The MACD is rising bullish and with the black line over top of the blue line. Looking at the weekly chart, you're going to see that things have been relatively flat. Both the 26 and 40 EMA are both rising, albeit slowly. We're going to end up seeing what happens over the next couple of weeks and seeing if the TSX is going to end up continuing its rise, or if it's going to follow suit with the US markets and start their declines. Really jumping back over to 2004, you're going to see that we've got quite a bit of resistance overhead. While the S&P 500 had itself a new highs and new territory, we've got a lot of previous cycle highs here, dating right back several years even, that we need to break through. If we can see the TSX chug itself up to 15,000, that'll definitely be something that'll end up in the history books, because that'll be quite the climb for it to get there. Very possible, again, if you look at where the TSX is right now compared to where the S&P 500 was, you see that those types of gains are possible. Obviously, it's going to very much so depend on the Canadian economy. So with that said, and to wrap things up here, we can see that the volatility indicator is currently at 14.33. This means that we actually are up 7.16% from last week's close. So we're definitely a little bit higher. Although we're not within our normal trading range between 12 and 14, we are still below the 200 EMA. If we get up above that 200 EMA, at that point we'll start to show a little bit more concern. So with that said, if you have any further questions, you can either send us an email or phone call. Both our email address and phone number are listed on the screen. This has been the end of week market review for August 16th, 2013. Ciao for now.